It is 9:09 a.m. Pacific Daylight Time. It is the 20th day of August 2026. This is episode, what? Like 1376 of Bitcoin and ColdCard theft. He may have been known to the FBI. Where have we heard that shit before, right? It's probably the FBI itself. That's going to be first up in today's news here on the Bitcoin and podcast with me, your host, David Bennett, bringing you all the news about Bitcoin and macro from around the world. And we're going to start with the ColdCard thing because seriously, dude, the FBI may actually know the attacker. That's, like I said, first up today. And then, second story today, Trump urges Senate to pass Crypto's Clarity Act. Then we're going to move on to Wall Street giant Citi. Looks like Citibank is getting even more into Bitcoin than we once thought. And then before we get into running the numbers, the market stuff, it looks like the Treasury has made an announcement about debt. And that may be why we're seeing a cautious breakout from the $64,000 level that we've been dealing with for weeks. Then we will do the market report. Coming into the second part of the show, Bitcoin.com and stablecoins. It shouldn't surprise me, and it shouldn't surprise you, because Bitcoin.com is kind of, Bitcoin.com changed severely after the 2017 hard fork of Bitcoin into Bitcoin Cash because, reasons. But now they're getting into stablecoins because, clearly everybody else is getting into stablecoins, including Elon Musk. X is exploring stablecoins to pay influencers. Oh boy, like we need more influencers. And then OpenLedger's Ram Kumar sees agentic payments for cryptocurrency as an AI killer app. And we'll get into that one. And then ending the show, we will do a 6-bug exploit. As if one wasn't enough, Maya Protocol has 6. Yes, I know it's a shit chain. I get it. But these are constant reminders, especially to anybody who's new. It's about Bitcoin. Everything else is trash. Okay? Everything else is trash. So let's go to the head of the show and talk about ColdCard. FBI may know the ColdCard attacker. This is Olivia Stephanie out of crypto.news. Investigators may have given U.S. authorities information capable of identifying an attacker responsible for the ColdCard theft wave. Galaxy Research's Alex Thorne said that the first wave attacker's identity may be known to law enforcement. His statement was cautious, and the FBI has not publicly confirmed anything, nor is it opening a case, but making an arrest or recovering any stolen Bitcoin could one day be on the table, I guess. Who knows what the FBI is actually going to do. But the first wave of the attack on ColdCard removed 1,082.6 Bitcoin from wallets generated using the vulnerable ColdCard firmware. Yes, we all know that. Block engineering lead Clay Garrett said investigators found an unusual pattern in the attacker's on-chain sweeps. The attacker allegedly used a paid account at an unnamed blockchain data provider to query source addresses and perform related activity. Block contacted the provider, whose internal logs reportedly matched the number, timing, and sequence of the suspected request with extraordinary specificity. Garrett said Block passed relevant information to the appropriate authorities. The account could contain payment, access, or subscriber records. However, no public evidence establishes which records were retained, who controlled the account, or whether the service received accurate identifying information. Block also said it found no evidence that the provider knowingly assisted the theft. The company appeared to have supplied ordinary services without actually knowing how the information would be used. Yeah, that's kind of standard. So Bitcoin Magazine's report linked the investigation, the investigative lead, to the FBI. But no FBI statement confirms the claim. No criminal complaint, indictment, seizure, filing, or forfeiture action was located in any public record. Thorne's wording is therefore important. An identity that may be known is not the same as verified suspect or charged defendant. Investigators must still establish who operated the account, who controlled the receiving addresses, and whether the evidence supports criminal charges. The first wave funds remain visible at associated addresses. As Crypto.news previously reported, the largest attacker's unmoved balance has not entered a known exchange nor a mixer. Those coins are not frozen. Bitcoin transactions cannot be reversed or blocked at the protocol level. Recovery would require control of the private keys, voluntary return, or a later transfer through an intermediary able to comply with a lawful seizure order. Galaxy's latest public research page lists losses of at least 1,700 Bitcoin across multiple waves. Others total remain higher because researchers use different address clusters, confirmation standards, and, victim reports. Later theft waves displayed different transaction patterns. Researchers have therefore cautioned that more than one actor may have exploited the weak seed space after information about the flaw became public. This distinction means identifying the first operator would not necessarily resolve every theft. Galaxy has distributed suspect addresses to investigators, exchanges, and analytics companies, but no agency has announced recovery. In related coverage, Crypto.news earlier's technical review found that the incident involved a weak seed generation rather than compromise of the Bitcoin protocol or physical access to devices, of course. So we go back to something that's the end of the article. We go back to something that I reported on, much earlier when this thing first broke out, is that it did look like the attacker used an online service, and we still don't know who the hell it is, but they use this online service to find these addresses. If that payment for those services can be linked to the identity of the actual attacker, then the FBI very well may know who this person is. I kind of made it sound like that they always knew who he was. No, that's not really what I meant, but I could see how it could sound that way. Still, though, the FBI, he was known to us as sort of a meme when it comes to this kind of shit with the FBI. Still, though, you never know. You never know. There could be some kind of forced recovery, and I don't mean by rolling back the blockchain or anything like that. You would actually have to get the person with the private keys to say, okay, I'm saying, uncle, you got me. I'm going to give everything back. It's possible. I don't know if it's probable, but it is possible. If the FBI gets their man, as used to be said in the 1970s television shows, then there could be hope for the people that lost life-changing amounts of money. On to Trump urging the Senate to pass Crypto's Clarity Act. Here's the catch in this story. He actually teases more Bitcoin buys, and I'm not sure what. So Matthew DeSalvo out of Bitcoin Magazine is going to tell us. U.S. President Donald Trump urged lawmakers to pass the Clarity Act on Wednesday. And he also hinted that the government may accumulate more Bitcoin. After gathering with crypto executives at the White House, President Trump said that getting the Clarity Act over the finish line would keep the U.S. ahead of China. Lawmakers were hoping to get a vote in August. A vote will now go ahead in September. The bill will establish a framework for distinguishing between digital assets that are securities, commodities, and payment stablecoins. Quote, we're ensuring that America remains the undisputed leader in not only Bitcoin and crypto, but also technologies like prediction markets, artificial intelligence, and much, much more, President Trump said. He also added, quote, now we need Congress to take the next step by passing the Clarity Act, a fair version of the Clarity Act, and this landmark structure legislation. It's a very, very powerful structured legislation which will keep us ahead of China and keep us ahead of everyone else, because apparently China is an alien culture and not like everybody else, not like other countries. China is its own thing. I guess it's its own freaking planet somewhere out in some other universe. Whatever. When asked if the U.S. government would be accumulating Bitcoin, President Trump said, quote, it's been talked about. It's taken a lot of pressure off the dollar. It's been very, very good for the dollar. And I think if regulators came in with recommendations, I would certainly listen. We need to probably revisit that. Continuing on, President Trump signed an executive order to establish the strategic Bitcoin reserve last year. Nevertheless, the president has recently spoken very highly of Bitcoin, even after sometimes he basically used to call it trash. Anyway, just last week, Trump said in an interview with Punchbowl News that, quote, you see people paying with Bitcoin and they don't even know about cash anymore, end quote. Despite being passed by the House of Reps last year, Clarity Act has been in a deadlock for most of this year after the banking lobby clashed with lawmakers and crypto businesses over whether platforms like Coinbase should be able to pay customers yield. And that's the end of that article. Let's go back up. I want to read this sentence again. When asked if the U.S. government would be accumulating Bitcoin, President Trump said, quote, it's been talked about. Okay, let's stop right there before I finish the other one. Yeah, Trump. Okay, actually, I'm not even bitching about Trump. I'm kind of bitching about Bitcoin Magazine because up here, the very first sentence of this news story says, President Donald Trump urged lawmakers to pass the Clarity Act on Wednesday and also hinted that the government may accumulate more Bitcoin. And then when we roll down here, he says, well, the quote actually is, it's been talked about. I know. Trump has talked about it on several occasions. He's talked about buying Bitcoin for the U.S. government on several occasions. That's the strategic Bitcoin reserve. This is old fucking news. Let's move on to the other part of this sentence. It's taken a lot of pressure off the dollar. It's been very, very good for the dollar. And I think if regulators came in with recommendations, I would certainly listen. Taking pressure off the dollar. Okay. Well, it's a 1 point whatever trillion dollar market cap. There's not much pressure that it can take off the dollar. And what pressure is he talking about? Is he talking about the dollar's relative strength versus the basket of foreign currencies? Essentially, I'm talking about the Dixie, the DXY, the dollar index. Has Bitcoin at a 1 point whatever trillion dollar market cap been able to reduce that kind of pressure against a $40 trillion debt? Much less all the rest of the M2 money supply? I think he's full of shit. I think this is a terrible, terrible sentence to put in front of readers who are kind of attracted to the headline that basically says, teases more Bitcoin buys. In my opinion, that is not a tease of the U.S. government buying any more Bitcoin at all, because they actually haven't bought any Bitcoin. They haven't actually purchased a single Bitcoin. So this Bitcoin Magazine headline that says teases more Bitcoin buys suggests that the government has actually purchased straight up Bitcoin. And unless I'm getting this wrong, it hasn't. This is why, looking at things with a critical eye is kind of critical. So I would, that entire Bitcoin Magazine article, I would take it with a grain of salt easily. Okay, now, Wall Street giant Citibank is getting into Bitcoin custody. James Hunt out of the block. Citi expects to launch Bitcoin custody later this year, starting with Bitcoin as part of its new Custody Plus platform. The bank had previously disclosed plans for native crypto custody in November, with Tuesday's announcement confirming a 2026 rollout and Bitcoin named as the first supported asset. Clients will be able to hold both traditional and crypto assets within the same framework, built on Citi's common digital asset architecture, the firm said. Citi said Custody Plus is designed for markets moving toward continuous trading and shorter settlement cycles, including real-time asset servicing, instant settlements, liquidity tools, and AI-driven market intelligence. Citi has been building out its digital asset infrastructure all year long, working with Intercontinental Exchange on tokenized deposits and joining a SWIFT pilot for 24/7 cross-border payments. Citi is also part of a group of major U.S. banks planning a tokenized deposit network through the clearinghouse, targeting a launch in the first half of 2027. So, honestly, what we just need to pull out of this is that not only is Custody Plus going to happen this year with Citibank, definitely one of the top 10 largest banks in the world, probably one of the top 5. And they're naming Bitcoin as their very first supported asset. Fairly important there, guys. Fairly important. All right, let's see if Matthew DeSalvo from Bitcoin Magazine can do a little bit better job than the last Bitcoin Magazine article that we read. Bitcoin blasts past $68,000 after U.S. Treasury doubles debt buybacks. There we go. Now we're talking about printing money. Bitcoin blew past 68K on Wednesday, jumping nearly 3% over a 24-hour period after news dropped that the United States Treasury planned to more than double the size of its government debt repurchase. Over the past week, the biggest and oldest cryptocurrency is up 3%. The Treasury Department said on Wednesday that it will more than double the size of its government debt repurchasing due to fixed income markets under pressure and yields surging to levels not seen in nearly 20 years. Quote, this increase in buyback operation size reflects Treasury's desire to provide greater liquidity support in longer dated nominal sectors where there is consistent, strong sponsorship from market participants, as evidenced by the significant volume of high-quality offers Treasury routinely receives in longer dated buyback operations, the department said in a statement. Lower, longer-term yields reduce the opportunity cost of holding non-yielding assets like Bitcoin and gold, and generally supports risk-on sentiment. Bitcoin behaved like a risk-on asset on the news, surging with stocks on the news as the US dollar fell sharply. The leading cryptocurrency has been battered since notching a new all-time high of 126K in October, but has still experienced the shallowest bear market so far in its history. The coin's volatility also stands at record lows. 2025 was the least volatile year for the asset, and asset manager Fidelity on Wednesday said that its volatility is now lower than 98.5% of all days in its 17-year history. That's the end of the article. I find that interesting. So what was just said? What did the Treasury Department just say? A couple things. One, they're going to print money because they're going to need liquidity to be able to actually buy back all this debt. And they're basically doubling. They're going to purchase over twice as much as they normally do of government debt, and they're going to need to print money to do that. Now, here's one of the issues of that. It's not really about Bitcoin. And in my opinion, it says, well, the Treasury says that it's due to fixed income markets under pressure. I don't think that's it at all. I think here's what happens if they don't do this. Well, there's a lot of reasons. Interest payments on the debt itself is problematic, and that's a big chunk of it. But we've got this massive AI build out going on. Hundreds of billions of dollars. And a lot of these companies are issuing their own private paper, which are bonds. They're not printing government bonds. They're printing their own. And they can do that. Michael Saylor does that shit all the time. Preferred securities. It all swims in the same public pool, and everybody's pissing in it. Still, you got these massive AI companies and private equity firms that are also printing their own bonds to give money to these massive AI firms. It all results in these bonds also having a yield. That's why it's a bond. It produces a yield. It gives a dividend at a percentage of the principal that was purchased at face value of the bond. But just because it's a private bond does not mean that you control the interest rate on the bond as the person that issued the bond. You're in the bond market now, little girl, and you're going to have to deal with the fact that you're swimming with all the rest of the bullshit. You're swimming in pissy water. Right? So the bond market essentially all affects each other as far as yield goes. So not only does the United States government have its own issues with its own debt, now if it wants to be a leader in AI, it cannot let that collapse. And if bond yields, even at the private level, like I said, where all these AI guys are, that's how they financed most of this bullshit. If their bond yields rise too, and they would because they're swimming in the same bond market as everything else in the world, then those companies wouldn't be able to afford that yield. The payout to the people that bought the bonds from the company and they took their money and gave it to these AI companies, or it was an AI company themselves and they used it to build infrastructure. They won't be able to afford to make repayment. So now here comes the government. Oh my God, it's because of fixed income markets. No, it's not. It is not due to fixed income markets. Yeah, I guess you could say that if you really, really wanted to, but if you peel away all the lies, it's because you can't afford the yield on your own debt, and you can't afford this burgeoning AI sector to completely collapse and evaporate in a spectacular train wreck. That's why. That's why. Let's run the numbers. CNBC futures and commodities, where Brent North Sea oil is up 2.25% to $93.72. West Texas Intermediate crude oil up 2.5% to $87.94 a barrel. Natural gas is the hedge, 3 points to the downside to $2.73 per thousand. And gasoline is down 0.4% to $3.24 a gallon. Murban crude peaking over 100 a barrel after a 1.6% gain itself. Metals are looking fine. Palladium up 0.17. Gold is up almost a half to 45.66 and 4 dimes. Platinum is up 1.4%. Silver is up 3 1/3 to 68.05. Ag is fully mixed today. The biggest winner is corn, 1.3% to the upside. And the biggest loser appears to be sugar, down 1/3 of a point. Meanwhile, live cattle up 0.7%, lean hogs crashing 1.5%. Feeder cattle up 1/3 of a point. The indices don't look happy today. S&P is down almost a half. NASDAQ is down over a half. And the Dow is down 0.8%, while the S&P mini is down a full half point. And then, holy shit, Bitcoin's at 72,300. Now it's a $1.45 trillion market cap. And we can get 16 full ounces of shiny metal rocks with our one Bitcoin, of which there are 20,072,682 and 1/3 of. Average fees per block are a bit elevated today. Right now, we got 45 blocks carrying 77,000 unconfirmed transactions, waiting to clear at high priority rates of 2 sats per VByte. Low priorities will get you in at 0.7. Now, if you want to support the Bitcoin and podcast, and I hope you do, then go to bitcoinandshow.com. That's bitcoinandshow.com. You can support the show in fiat currency directly from that website by buying any one of the 2 paid tiers that I have. You can choose a free tier if you want, but if you want to support materially the show and you find value in what I do and you want to give me value back, but you want to do it in fiat currency, that's where you do that. If you want to support the show in Bitcoin, while you're listening to the show, you can do that. But you got to use a Podcasting 2.0 podcasting app on your phone. I use Fountain app. It's my favorite podcasting app right now. Actually, it's been that way for about 4 years. It's been my daily driver. You can go find it at fountain.fm. You can get it for Android and you can get it for iPhone. It works fine. I love it. But it gives you a Lightning wallet, and through the Lightning network, you can stream me Satoshis, like 10 sats per minute or more if you want. Or if you just want to give me a straight up stack of sats, you can do that, and you can also attach a message to it, like from Jane Streetwalker, which was the day before yesterday's episode of Bitcoin and Permanerd gave me 12,345 sats. Dude, he says, I am still listening, my friend. Fountain still won't allow me to sign in with Amber, so the boosts are more inconvenient to send. Thanks for all that you do. Okay. Yeah, it's still inconvenient for some people to do some things. Depends on your phone, depends on your operating system, it depends on which Podcasting 2.0 app you have. Some people have issues with Fountain. I happen to not have issues with Fountain. I have issues with a couple of other different Podcasting 2.0 apps, and other people tell me it works just fine for them. You got to find your lane, man. You got to find your lane. So it sucks that Permanerd has problems with Fountain. I just have never had really an issue with Fountain. I just haven't. But you got to pick and choose which one is going to work right for you in your context, in your phone. Mutum 8 with, 4,444 sats. Thank you, dude. He says, now you have to be an AI security expert before you can build anything and be able to pay for the scrutiny. It's the new moat. Yeah. He also gives me a row of ducks, 2222, and he says, hey, David, what do you use for receiving Nostr DMs? I find Primal to be sketchy in that a lot of DMs go unanswered, asking for a friend. I don't use Nostr DMs. That if you're sending me DMs on Nostr and I haven't gotten back to you, it's because I kind of stopped using them. It's okay. We don't have to have everything perfect on Nostr. It's also a bear market. People got the wind sucked out of them. So people that were working on Nostr, we're not seeing as much development. And oh my God, it means Nostr's going to die. No, it doesn't. It means everybody's fucking impatient, like a 4-year-old waiting for, I don't know, an apple juice, whatever. Everybody be calm. I am trying to get more into using Signal. So, Mutum, just tag me in a regular note on Nostr. All right? Just type at none your business or, whatever. And when it auto fills in, say, yep. And then say, give me your Signal address and me and you will work out how I get that to you. It's safe and effective, right? If you know my handle on Twitter, which I think is David Bitcoin's Bitcoin and podcast. You can get a hold of me there. I haven't been hitting Twitter or Nostr for that matter as much in the last couple of weeks, honestly. And it's not because, it's like if you haven't seen me on Nostr, it's like, oh, it's because he's on Twitter. Not really. It's because I think a lot of people are starting to see that there's really not, there's not as much value in Twitter as people thought there was. And I think there's a general malaise in social media. It's one of the reasons why the Nostr protocol is more important than ever, especially if you understand it doesn't have to be used for social media. It does not have to be used for social media. That was just the first best low-hanging fruit, right? So for the time being, if you really want to talk to me DM-wise, tag me in a note on Nostr. Ask me for my signal address, and then me and you will work out how I get that signal address to you. Rev Hoddle with 420 says, you should look at the stats of your podcast on onlyboost.com. Your podcast is well loved. Really? I will have to look at that. Thank you, Rev. Appreciate it. I've never even heard of that before. Nick Dose with 260 sat says cheers. Jason High with 250 says thanks for the show. Nostr Gang with her customary 101 sat says fuck NVK. That's what I love about Nostr Gang. She can be salty. It's fun to find females that are just as salty as any of the dudes that you grew up with on the playground. And there's a couple of them on Nostr, man, and Nostr Gang's definitely one of them. That's the weather report. Welcome to part 2 of the news that you can use. Bitcoin.com integrates UAE-registered US dollar stablecoin into self-custodial wallet. A little specific, but Nate Koster from Cointelegraph is going to tell us more. Bitcoin.com is integrating USDU, a US dollar-backed stablecoin registered with the Central Bank of the United Arab Emirates, into its self-custodial web and mobile wallet. USDU is issued by Abu Dhabi-based Universal Digital and is the first and currently only foreign payment token registered under the UAE Central Bank's Payment Token Services regulation. Universal is also regulated by the Abu Dhabi Global Markets Financial Services Regulatory Authority to issue fiat-referenced tokens. According to Wednesday's announcement, the Ethereum-based stablecoin will be available for users to hold, send, and receive through the wallet, while swap and buy and sell functionality is expected to be added later through third-party providers. And I'm sorry that I'm laughing, but Bitcoin.com having an Ethereum-based token in its wallet should tell you everything that you need to know about Bitcoin.com and the people behind it. It's a shitcoin website now. Has been for a while, but yeah, it just gets worse and worse and worse. Bitcoin.com said it plans to accept USDU for designated services and work toward enabling payments between users and merchants across its products, though availability will vary by jurisdiction. Universal launched USDU in January. Under the country's payment token services regulation, payments for digital assets and digital asset derivatives may only be in fiat or registered foreign payment token. The Bitcoin.com integration follows a broader distribution push for USDU. Zodia Custody added support for the stablecoin in July, allowing institutional clients to hold and transfer it, while a USDT USDU liquidity pool launched on Uniswap in August, adding decentralized liquidity for the token. That's the end of the article. That's all you need to know. Is that Bitcoin.com is a shitcoin website, has been for years, and that the United Arab Emirates is seemingly fairly well represented itself in the stablecoin market. And generally speaking, I would say that their stable coin is technically worthless, except it's the UAE. It's not like Ghana. All right. I mean, not anything. I'm not trying to say anything bad about Ghana. I'm just saying Ghana's not the UAE. Right. I mean, I could almost say the same thing about Brazil. Brazil's massive country, got a shit ton of people in it, lots of industry, big economy. And if they were to say, hey, it's the Brazilian stable coin, I would, I don't think it's going to really amount to anything. But the United Arab Emirates, it's different. All right. You're talking about a Middle East country that's extraordinarily wealthy, extremely wealthy. So this may be a stablecoin that we have to watch. Meanwhile, Elon Musk has his sights set on a different stablecoin because Elon Musk's X is exploring stablecoins to pay influencers and content providers. CoinDesk, Ian Allison writing this one. Social media platform X is in talks to explore how stablecoins such as Circle Internet's USDC can be used to pay royalties to influential users for uploading content, according to a person familiar with the plan. The conversations with X are ongoing, said the person, who also works with other social media platforms, testing stablecoins as a way to pay commissions to influencers. Media representatives of X did not immediately respond to a request for comment. It's not surprising the Elon Musk-owned company is looking to stablecoins to pay royalties to content providers. Musk's SpaceX already uses stablecoins to collect cross-border payments from customers of Starlink, which provides satellite internet services. In March, Musk hired crypto veteran Benji Taylor as the head of design at X, tying his role to both XAI and SpaceX. Taylor, who led design at Coinbase Global's Base blockchain network, has a background in wallets and decentralized finance. X is overhauling how it pays creators, as outlined in a recent post by the social media firm, phasing out its long-running revenue sharing program in favor of a new system called the Original Content Rewards Program. The new program is designed to reward creators who bring original ideas, expertise, reporting, creativity, and commentary to X, according to the company itself. So yeah, a couple of weeks ago, we saw that, I saw a couple of people posting this, I don't know, I guess it was a press release out of X that said that they were going to change up how they did everything. And a lot of people were not happy about it. So I think even more people that are influencers that are finding that they don't have the stability that they thought they had, are probably not going to find this news all that much more agreeable. Just saying. But this goes back to, let's see, see if I highlighted this up here. I didn't. Let's see. Yeah, here it is. The conversations with X are ongoing. Said the person who also works with other social media platforms testing stablecoins as a way to pay commissions to influencers. And I wanted to read that again because I want to revisit something that I said earlier. I think social media is going away, but that's not really what's happening. It was just the best way for me to put it at the time. I think what's happening is that social media is converting into how to say this. Forever, we've had newspapers, we've had magazines, we've had radio news shows, we've had fictional programs like, I don't know, The Shadow, and murder mysteries. And then we got TV. And then we really started getting between radio and TV, we really started getting into the media part of high tech advertising. That's where the high tech part of the advertising started, where you got audio, and then with TV, you got audio and video with advertising, plus all the news programs and all the fictional programs that were going on television. Then the internet comes along and it just goes on and on and on. You get streaming platforms and YouTube and all this kind of shit. And I think what's happening is that now we've gotten to the point where I'm seeing something kind of collapse altogether. Like all the way from the earliest pamphlets and magazines and newspapers all the way up to where we are currently today. I'm seeing it kind of like do an accordion squash. And what's going to be birthed out of that supernova is I think this is where Elon Musk is trying to take it. I think he's trying to skate where the puck is going. I don't think that this is his idea insofar as, hey, I got a great idea. I think this is him basically witnessing what I think I'm seeing is this complete compression of all media into this thing where now we call them not talking heads or news personalities or television stars. We call them influencers. And now we have like a few platforms that have no middlemen involved in it at all, like the news media that we have today. And I think, like I said, I think Elon Musk is skating to where the puck is going. I think we're in the next 10 years. I think you're going to see the absolute death of everything we thought social media was and everything we thought legacy media was. And this mutant abomination is going to fall out of this whole fucking thing. And it's going to be even worse, probably. Now, it could be better. It's possible. It could be a good thing, but I doubt it. Let's move to Open Ledger. Open Ledger's Ram Kumar sees agentic payments as crypto's first AI killer app. This is Brian Danga out of the block. Open Ledger core contributor Ram Kumar sees agentic payments as crypto's first AI killer app, arguing that AI agents will turn to crypto because they cannot open bank accounts or complete know your customer checks. Quote, the natural way for an agent to use and transact, at least in the next few years, will be crypto, Kumar told the block's Kevin Sparks at the Wyoming Blockchain Symposium of 2026. Quote, an agent cannot create a bank account. It cannot do KYC and stuff. The easiest access is obviously to use crypto to pay, he said. Kumar said agent-driven trading will be the next major use case for AI and crypto. He said people already use AI to research tokens and stocks, with agents eventually taking on more of the trading process. Quote, the next evolution is to use agents to trade. At least start with a very small amount and then increase from there, end quote. Open Ledger is also preparing to expand beyond its B2B focused product to serve customers. The platform will allow users to fine-tune AI models and access models available on the platform, while the company plans to add more privacy options. Quote, the next couple of years will also be focused on B2C market from Open Ledger, Kumar said. The company has focused on AI infrastructure since raising an $8 million seed round led by Polychain Capital and Borderless Capital in 2024. Last November, it launched Open Mainnet, designed to track AI data provenance and distribute rewards to contributors. Kumar said Open Ledger views blockchain as a service layer for AI rather than the product itself. He envisions it for privacy, data, transparency, and reward distribution. The company is also betting on open source models. Kumar said Open Ledger wants to eventually let customers build customized AI models without code, extending its existing model fine-tuning capabilities beyond developers and enterprises. Quote, we want to make sure that how we can, hold on, let me do that again. Quote, we want to make sure that how we bring it to the larger masses. In the future, we would ideally want any Joe and Jack to go ahead and use our product and build their own version of AI that they need, which is completely no code. Yeah, that shit's coming. I'm actually already building. I don't know. I'm building like custom LLMs for like short-term use. Like we had a question on some oil royalties that our family companies get. The oil company that is the operator of the oil wells that they're selling oil from started, we discovered that they had been deducting money from our royalty checks, and they weren't explaining why. So I trained up a LLM on the Texas Railroad Commission, because that's who handles oil and gas procedures. And I mean all procedures: royalty reporting, certification, getting a drilling permit, it's all Texas Railroad Commission. It is the central repository for anything oil and gas in the state of Texas. And I'm like, go there and train yourself up as a royalty accountant, a specialist at an oil company that deals with building the royalty reports for royalty owners. Then I literally spent 30 minutes just saying, I want you to go here and I want you to learn this. I want you to look at this and I want you to research that. And I want you to compile it all together. And like I said, it takes, a good amount of time to build a good one. But once you kind of got it locked in, then I can do stuff like give it all of our royalty statements from this one company and have it do a complete fucking audit. And it came back with basically saying, hey, look, I read all the statements that you gave me, and I read the original agreement that you had with this company, and they can't do this. Now, you take it with a grain of salt. But when I started looking at why it was saying that, I go back to the original agreement we had with this company, and it's like, you can't deduct. Literally, it says you are not allowed to deduct under the terms of this agreement for the following things. I just got an email from that company that said because we had asked them, what exactly are you deducting? You need to line item this out for us. And it said, we're deducting for marketing. And which is exactly what this particular fine-tuned LLM said. No, you say specifically that you cannot deduct for marketing. We got an email from this company that says we're deducting from marketing. Boom. That's breach of contract. It's breach of contract. And I knew it a week before I got this email in. That's how powerful this stuff can be if you use it properly. You don't expect something that it can't do to be done. You have some respect for yourself insofar that you actually go out and check how it says it's being trained. Like you say, I need you to give me a synopsis. What did you look at? How do you think that this fits with the training I asked you to do? And you have to read a lot. But if you do all that shit and more, you end up with a fairly fine-tuned LLM. That's kind of what Kumar's saying here. And then you got to ask the question, what the hell is Open Ledger? Let's find out. Open Ledger. Yep, Open Ledger. Let's see. What is Open Ledger? Embedded accounting in your platform fast. So this is out of openledger.com. Open Ledger transforms your platform's financial data into an AI-powered accounting system your SMB customers rely on, fully embedded inside of your product. Okay, so it's essentially accounting APIs that you can use in whatever you happen to be building yourself. And they are going full-blown AI agents for payments. Now, here's some other stuff that I want to talk about. Ram Kumar, this is a quote, Ram Kumar sees agentic payments as crypto's first AI killer app, arguing, and here's the rub, that AI agents will turn to crypto because they cannot open bank accounts or complete know your customer checks. Okay, so that's the quote that I want to deal with. They will. A lot faster than you think. Banks, I guarantee you, banks will go, we've got to enable AI agents to open bank accounts. We've got to have a protocol where we can do this safely under the bank, safely for us, for the bank, to make it safe for the bank so they don't get sued and they don't get any of their suits have to go to jail or, God forbid, have to go talk in front of a fucking federal council or something like that. They are wanting they will want to build a protocol that makes it safe for them to allow AI agents to be able to open bank accounts and completely adhere to the Bank Secrecy Act, know your customer, AML, everything. It will not be long before these AI agents that we think, oh, they're all going to use crypto, will have a choice to be able to use the fiat currencies of the federated systems around the world, which we don't want because it's a fiat hellhole out there, but still, let's not fool ourselves. Let's not just, oh, they're never going to use fiat. They're never going to be able to open a bank account. They will never be able to. Yes, they will. Yes, they will. Yes, they will. And you're probably going to see the first inklings of that next year. Do I have like some kind of prior knowledge? No, I do not. It is a gut feeling. Bitcoin caught all federal governments around the world with their pants down around their ankles. And they are not going to let that shit happen again, ever. And this AI agent being able to use currency, whether crypto or fiat, it doesn't matter. The fact that AI agents can go out, find X, Y, and Z that has value for the person that created the agent or gave the agent its agency is going to scare the piss out of them. It already is, I guarantee it. And they are not going to do that thing where they point at it and laugh for 10 years. They learned that lesson the hard way with Bitcoin. They got beat around the head and shoulders. They are still bruised. They are still bloody. They have cuts. They got stitches, lacerations. They got a bad knee out of the deal. They got a bad ankle out of the deal. They got a bad back out of the deal. They're never going to let that shit happen again. It was a fucking wake-up call for all of the ugly people that didn't get laid at prom. And I'm talking about politicians, talking about bankers. The beauty of the banker is in their wallet. I'm sure there's some good-looking bankers out there. Who knows? I don't give a shit. My point is that the power play stuff, generally speaking, attracts psychopaths, sociopaths, and people who never really ever got laid in high school. So they have something to prove. They got a big ass chip on their shoulder, and they've got a massive wallet. And I was musing with a thought the other day. I'll leave it here. That one of these days they might find that the vast majority of the population of the world just doesn't give a shit about their fiat anymore. And that's why we Bitcoin, because it won't matter at that point how much money they have in their bank account. It'll be worthless. They will have to have legal title, like straight up legal title to actual physical property. And the only thing that they could have, quote unquote, an account of that is going to have any value whatsoever is going to be Bitcoin. Just want to make that very clear. Last up today, 6 bug exploit halts Maya protocol after $1.4 million of Bitcoin is stolen. Not shitcoins, not crypto, actual Bitcoin. Decrypt.co, Jason Nelson writing for them. Cross-chain liquidity network Maya protocol halted operations Tuesday after an attacker exploited not one, not two, not three, but 6 software flaws to drain roughly $1.7 million in Bitcoin and other assets. In a post on X explaining what happened, Maya protocol founder, I can't pronounce the handle, but he's also known as Maya, said that the team halted the network to contain the damage and would fix the vulnerability before resuming. Quote, "No way to sugarcoat this. We have likely been exploited for 20 Bitcoin and other assets." Maya protocol operates Maya Chain, a decentralized network that lets users swap cryptocurrencies such as Bitcoin and Ethereum across blockchains without using a centralized exchange. In a post-mortem report, the team behind Maya protocol said the attacker exploited 6 bugs to inflate a liquidity pool by a whole bunch of something called cacao, then gained 99.93% control of the pool and withdrew all of that cacao. Quote, "The attack used a single 23 message MSG deposit transaction to trigger a false theft detection inflate a low liquidity pool's cacao balance via an uncapped /subsidy, then immediately LP'd into and withdrew from the inflated pool to extract the value. That's the quote. So I guess LP'd means liquidity pooled. Anyway, as the attacker swapped the tokens for Bitcoin and other assets, cacao's price collapsed, limiting the amount ultimately extracted. The team estimated the attacker took roughly 1.65 million in crypto assets, including 1.36 million moved to external blockchains and about 291,000 remaining on chain. The team did not say whether it believes AI was used for the attack. Maya said the bugs had gone undetected for 3 to 4 years despite audits by Halborn and Fable5, adding that the team needs to take a more adversarial approach to reviewing its code. Quote, "We have to get even more adversarial and look for extremely simple code primitives. We already know our job was difficult, but the mission is worth it." Maya Protocol published the suspected attacker's Bitcoin address, which received 20.83 Bitcoin. The team estimated roughly $1.65 million was taken in total and said it hopes the funds will be returned. Hope springs eternal, I guess. Let's see, where is it? If it's not returned, Maya said that the team plans to recover the roughly 20 Bitcoin through investments in Aztec chains and, quote, other means, and return it to the affected pool. Again, good luck. The news comes after several major DeFi exploits in recent months, and then they go and recount the woe and the sorrow and the gnashing of teeth and the whining of babies about people that never listened to the Bitcoiners in the first place and went all in on DeFi. Don't do that. If it says DeFi, your first inclination is to run, don't walk away from that. That's the best piece of advice I can give you today on this Thursday, August the 20th. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.